Multifamily property is attracting even more interest, leading to increased demand. However, many investors are unsure how to value multifamily property. How do you quickly assess deals to see if they're worth making an offer on, and how much should you bid? Knowing how to value a multifamily property keenly assessing the deal for cash flow and value add opportunities can help you find the deals that benefit you and other investors who may not have the time or interest to value the property themselves. Now, in this document, we're going to explore what multifamily properties are and how to value them so you can level up your investing strategy. What are multifamily properties? Multifamily properties include apartment buildings, duplexes, townhouses, and condo buildings. There are any properties in a neighborhood with more than one housing unit. When deciding which property to invest in, you can use the following steps to learn how to value a multifamily property and understand whether you're getting a good deal or not. First objective is to determine the net operating income, or NOI. The net operating income levels the playing field for all comers, telling you how much more income you can expect after you've handled the day-to-day financial demands of the property. You can use the numbers provided by the broker for preliminary screening, but you should ask for and research the number yourself. That way you can do your own calculations by using this simple formula. NOI equals total income minus total operating expenses. The total income includes total rent, total fees, which include pet fees, late fees, any coin-operated laundry income. Total operating expenses will include a vacancy, generally about 5 to 10% of the total rent, taxes for the city, county, and state, insurance from an insurance broker, maintenance. This is in case you have, lawn mowing, common area maintenance, or even snow removal if you're up north. Management, ask local property managers for rates. Utilities, you can call the local utility companies to get an idea of what electricity rates are. And you also want to budget for repairs for 3 to 5%. Finally, you'll need professional fees for services from lawyers, electricians, or advertising agencies. When you subtract these amounts from your total income, that's how you get your NOI. Now, a cap rate or capitalization rate is the expected return on the income in the real estate. Knowing that the cap rate deciding which property to invest in can be helpful. The formula for capturing a cap rate is NOI divided by value equals the cap rate. For example, if property has an NOI of $50,000 and is listed for $500,000, it's going to have a cap rate of 10%. $50,000 divided by $500,000. It's a simple equation that can tell you a lot about the multifamily property you're interested in. You're going to need to do your due diligence. When you're looking at hundreds of deals, quick analysis can save you a tremendous amount of time. And do your due diligence for each multifamily property that you're serious about investing in. This includes obtaining bank statements, rent rolls, unit inspections, and so on. All the documentation and hard facts will either confirm your assumptions and verify the numbers, or they won't. Find the right location. Where your multifamily property deal is located will play into its overall value, especially long term. Make sure to research the neighborhood around the building as well as the city it's in to understand its potential. The more you know about the area, the better you can determine whether the value of the property will increase or decrease over time. Look into an area's crime rate, demographic makeup, and economic stability. These are all good indicators where the location is headed in terms of whether people will want to live there in the future. You can always perform a comparable sale search. Check out what rents are for similar units next to the multifamily property if you're considering it as an investment. By performing a comparable search, you'll get an idea of the overall rental income. It'll also give you an idea of the price similar multifamily properties are selling for nearby and or renting properties nearby, whether you're higher or lower. And you have to take into consideration the age and condition of comparable properties when doing your research. With the numbers for comparable properties in hand, you can look at the numbers for your potential investment and see if they make sense. Now, if you have to do work on a property, use the comps to see which units are experiencing higher occupancy. Try to choose a multifamily property that will attract the most renters is the overall goal here. Lastly, the last thing you could do is go see the property. You'll be able to drive through the neighborhood and see how it is within your own eyes. Walk around the grounds of the building, look at maintenance areas, and explore common spaces. And if you can, if there's you can schedule a showing, go into the units and take a look as well. As you walk around, you need to ask yourself what makes the property unique and what you will need to do to improve it. If the property looks good and you think it's a deal you want to make, you can move forward with it. Now, on the other hand, if you don't like it or something doesn't work out on paper, don't be afraid to leave the deal either. Either way, you'll know exactly how to value the multifamily property right away. Now, if you're in need of an experienced commercial real estate broker, I can be reached at 281 222 0433. Thanks for your time and have a good